China's currency, the yuan, recently hit a 4.5-year low against the U.S. dollar. And the currency may continue its weakening trend against the dollar because China's monetary policies are loosening, while those in the U.S. are finally starting to tighten, possibly beginning with interest rate rises this week. How would all this play out for the Korean economy? Will it hurt Korean exporters? Our Kim Min-ji explains.
Will the Chinese yuan depreciate further down the road? According to a Bloomberg survey of 64 foreign investment banks, the yuan is expected to trade at an average of 6.61 against the US dollar at the end of next year. That means on year, the Chinese currency is forecast to lose 2.3% of its value. On Tuesday, the yuan weakened against the dollar after the central bank set its official midpoint at its lowest level in more than 4 years. China also announced it intends to depeg the currency from the US dollar and instead link it to a basket of 13 currencies, including the dollar, euro, and yen, which would give it room to fall further. The move is widely seen as an attempt to manage the yuan's value against the greenback ahead of a widely expected US rate hike this week, as a stronger dollar would in turn raise the value of the yuan. But some analysts warn that a further decline in the yuan's value could hurt countries that compete with China on the trade front, such as Korea, and could risk a currency war.
If the yuan weakens further, Korea's exports to China will slow, and it'll also hurt the price competitiveness of exporters that compete with China. It also push other countries to devalue their currencies.
Analysts add that while China will likely maintain its loose monetary policy, it's not likely to intervene in devaluing its currency any further. So while the yuan is expected to continue its downward slide for some time, there won't be any drastic drops in the foreseeable future. Kim Min-ji, Arirang News.